And later, Roaring Kitty barks. The market provocateur sending out a cryptic message this afternoon that sent shares of Chewy and other pet stocks on a volatile ride. What the options market is saying about the moves. Welcome back to Fast Money. Chewy shares on a roller coaster today, briefly halted for volatility after rising as much as 34% at its highs. Shares of PetMed Express and Petco also spiked midday, but all stocks closed well off their best levels of the session, with Chewy ending the day in the red. The move's coming after Roaring Kitty retail trader Keith Gill posted this photo on X. A dog on a blue background, his tongue sticking out. A flood of bullish options activity in Chewy, adding to speculation that Roaring Kitty has his paws all over this one. Baycrest Managing Director David Bull joins us now with some more color on what went on in the options market. David, what'd you see?
So that's right. There was buzz about a dog tweet and call option volume in Chewy. Now, there's been speculation whether or not Roaring Kitty would potentially look at a different name after he seemingly exercised the GameStop options and turned those into stock about 2 weeks ago. Now, speculation has always been there with Chewy because of the link between Ryan Cohen, who's the CEO of GameStop, largest shareholder, and previous co-founder of Chewy. Speculation heated up after the tweet. And looking back, just like we did in GameStop, were there any breadcrumbs in the call options in Chewy? And there were. About 20,000 of the July 30 calls traded about 10:40 a.m. this morning, and the tweet hit about 1 p.m. Looking back over the last week, almost 75,000 calls traded on this line. That's about $12 million of premium, pretty sizable, less sizable than the $170 million premium outlay that Roaring Kitty previously took in GameStop. But the way in which these executed seemed pretty similar in terms of pretty aggressive, pretty execution style, and the way they went in clips 5,000 contracts and less.
David, thanks. David Bull, Baycrest. Karen, does seem curious, the ties between the two. And
it does, especially, just a conspiracy theory thought. There was an article that came out last night in the Wall Street Journal. It was taking some of the Sue Gov, who was one of the board of directors, one of the directors on the board of Bed Bath & Beyond, and they were talking about, she was saying that there was a concern that there was a leak between members of the board going to Ryan Cohen. Now, this was in a deposition, I believe, and so that seemed sort of odd that today would be the day to sort of go after
tweet a cartoon dog.
Tweet a cartoon dog, exactly.
Yes.
And interestingly, also in the article, there was someone, they were talking about a basket and then a moon tweeted. Right. I think that Ryan Cohen people are like, that's not bullish.
To the moon.
Yes, I think that is a signal, a bat signal.
Yeah.
To the troops.
Obviously.
I think so.
Yeah. All right.
Let's provide some additional context about Chewy. Yesterday, Chewy announced that it is repurchasing 17,550,000 shares of Chewy stock at the price of $28.49 per share. That works out to approximately $500 million. These shares are being purchased from Buddy Chester Sub LLC, which is affiliated with funds advised by Chewy's largest shareholder, BC Partners. Chewy said they expect this repurchase to close today, June 27th, and the shares will then be canceled and retired. So in other words, they are effectively reducing the number of shares outstanding by more than 4%. That is very bullish. It appears Chewy wanted to provide additional value to shareholders while also reducing the ownership percentage of the company's largest shareholder. Keep in mind that Chewy was founded by current GameStop CEO Ryan Cohen, and Ryan stepped down from Chewy back in 2018. Now about Keith. I have no idea if there's a connection between Keith and Chewy or not. Maybe Keith was trying to tell us something else and it was misunderstood. Or perhaps he is buying Chewy calls. Honestly, I don't know. Hopefully we'll get a YOLO update from Keith soon. And honestly, the repurchase announcement from Chewy is very bullish for the company, and so I would not blame Keith if he's trading in light of that news. Now let's briefly talk about the XRT retail ETF that's been getting a lot of attention recently because this is crazy. Both GameStop and Chewy are held in this ETF. And as of June 26th, Chewy is the most heavily weighted stock in this ETF. You can't make this stuff up. So with this in mind, maybe Keith did want us to pay attention to what's going on with Chewy. I'm now even more interested to see the FDD data on XRT once it's released, and I think it is absolutely insane that failures to deliver are not reported on a daily basis. Instead, they are reported every 2 weeks. It makes no sense that individual investors have to wait weeks just to get a data point that should be readily available to the public on a daily basis. The SEC cannot honestly claim that it cares about investors receiving proper disclosure when the agency does not even require daily reporting of FDD data to the public. As I often say, the financial markets are plagued by so many problems, including intentional inefficiencies and intentional opacity at the expense of individual investors. This needs to change. As individual investors, what we want is simple, and nothing we're asking for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers, and we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.